Have you ever stopped to think about how the world changes every couple of decades? One big shift after another, and each time, the people who understood these shifts early on end up way ahead of everyone else. Think about it. The internet in the 90s, social media and YouTube in the 2000s. And now, we're standing at the edge of something massive again. Digital money. What's happening right now in the investment world isn't just another trend. It's a potential global transformation. And in this video, I'm going to break it all down for you step by step in a way that's clear, practical, and packed with real insight. Looking back, 35 years of major shifts. Let's rewind to the late 80s and early 90s. Most people didn't even have computer at home, but something was brewing, the birth of the internet. In 1991, the World Wide Web became public. Fast forward a decade, and suddenly companies like Amazon, Google, and eBay weren't just ideas. They were shaping the way we live, shop, and work. People who understood that shift early and invested made fortunes. Then came the early 2000s. YouTube launched in 2005, Facebook in 2004, Twitter in 2006. At first, people thought these platforms were just for fun. But over time, social media changed business, politics, communication, everything. If you invested early in companies riding that wave, you would have multiplied your money many times over. By the 2010s, smartphones became the center of our lives. The way we consume content, make payments, work, travel, everything started happening through our phones. These shifts were massive, and the pattern is clear. Every 10 to 15 years, a new technology emerges. People underestimate it, and then suddenly it becomes the foundation of everyday life. Here's the question I want you to think about. What is the next big global shift? Because identifying that before it happens is where real opportunities are created. Digital money and blockchain. In the last decade, we've witnessed the rise of digital money, most notably through Bitcoin and other cryptocurrencies. Back in 2009, Bitcoin was an experiment. 2010, you could buy 10,000 Bitcoins for 2 pizzas. Today, that would be worth hundreds of millions of dollars. But beyond the price hype, the real story is the technology, blockchain, and the movement toward decentralization. Governments and central banks worldwide are exploring central bank digital currencies. Big companies are integrating blockchain for supply chains, contracts, and payment. PayPal, Visa, MasterCard are working with crypto. Even countries like El Salvador made Bitcoin legal tender. This isn't a fringe movement anymore. It's slowly integrating into the mainstream financial system, just like how the internet quietly integrated into businesses in the 90s. Investors are paying attention because digital assets could represent a fundamental shift in how we store, transfer, and grow wealth. Unlike traditional systems, which rely on banks and governments, digital money runs on decentralized networks. That means faster transaction, lower fees, and global access. Think about this. If you wanted to send money overseas 20 years ago, it could take days and cost a lot. Today, with crypto, you can send money instantly to anyone, anywhere in the world, 24/7 without intermediaries. That's revolutionary. We've seen similar patterns before in the 90s. Few people believed that buying books online would work. Then Amazon happened. Today, few people can imagine the financial system without banks. But in 10 to 15 years, we might look back and say, remember when money wasn't digital? Before I go deeper, if you are enjoying this breakdown and want more real talk on money, investing, and the big trends shaping our financial future, make sure to hit that subscribe button and turn on the notification bell. This way, you won't miss any of my weekly videos that help make money simple, smart, and stress-free. Now let's get into the details of why this digital shift could be the biggest investment opportunity of our lifetime. Mass adoption, the real driver of growth. For any technology to truly transform the world, it needs mass adoption. The internet took roughly 15 years to reach 1 billion users. Social media did it in less than 10. Smartphones, even faster. Crypto is currently estimated to have between 400 to 500 million users worldwide. That's roughly where the internet was in the late 90s. Think about that for a second. If this adoption curve follows a similar trajectory, we could see billions of users within the next decade. And with mass adoption comes infrastructure, payment systems, investment vehicles, regulations, tax structures, and global accessibility. That's why companies like BlackRock, Fidelity, and major banks are now getting involved. They're not here for short-term speculation. They're building for the next wave. Real-world example, Venezuela's hyperinflation. To really understand why this matters, let's look at Venezuela. Over the last decade, the country went through one of the worst hyperinflation crises in modern history. Their currency, the bolivar, collapsed. At one point, inflation hit over 1 million% in a single year. People's savings, pensions, wages became worthless overnight. But here's the thing. The people who understood crypto early were able to protect themselves. Many Venezuelans turned to Bitcoin and stablecoins as a way to store value and send money in and out of the country. It allowed them to bypass government restrictions, avoid banks that were failing, and keep their wealth in something that couldn't be inflated away. That is a real example of how digital assets can protect ordinary people when traditional financial systems fail. And it's not just Venezuela. Similar patterns have happened in Turkey, Argentina, Lebanon. Institutional involvement and legitimacy. The entry of institutional players has changed the game. When asset managers like BlackRock file for Bitcoin ETFs, it signals that the big money sees potential. Pension, funds, endowments, and insurance companies are starting to allocate small portions into digital assets. This legitimizes the industry and makes it easier for average investor to get exposure through regulated channels. Think back to when mutual funds and ETFs made stock investing accessible to everyone. That's the phase crypto is entering now. Here's something to remember. By the time the average person realizes a trend is real, the early movers have already positioned themselves. That's why paying attention now, not 10 years from now, matters. Risks and realities. Of course, no major shifts comes without risks. Cryptocurrencies are still volatile. Regulations are evolving. There are scams, hype cycles, and technological hurdles. This is similar to the dot-com boom. Not every company survived, but the internet itself thrived. The key is education and smart investing strategies. Understanding which projects have real utility, strong teams, and adoption potential is crucial. Just like not every internet stock became Amazon, not every crypto will become Bitcoin or Ethereum. Why does it matter to everyday people? This shift isn't just for tech insiders or wealthy investors. It affects everyday people. Think of immigrants sending money back home. Think of small businesses accepting global payments. Think of individuals in countries with unstable currency having a way to store value securely. For young investors, this is a chance to participate in the early stages of a potential transformative asset class. For older investors, it's about diversification and understanding where the future of finance is heading. The next 10 years. Looking forward, the next decade will likely see a blending of traditional finance and digital assets. We'll probably see CBDCs alongside Bitcoin, tokenized real estate, decentralized financial applications competing with banks and payment systems we can't fully imagine today. The internet didn't replace everything overnight. It layered on top of existing systems and transformed them from within. The same pattern is happening here. History shows us that major technological shifts happen roughly every 10 to 15 years. Those who pay attention, learn, and position themselves early often benefit the most. Digital money might be the next big global shift, not just an investment trend, but a complete rethinking of how value moves around the world. I hope this gave you clarity on why crypto and digital assets are getting so much attention right now. If you found this valuable, hit that like button and share this with someone who needs to understand what's really happening. I'm Thuc, your money guy, making money simple, smart, and stress-free. See you in the next one.